Ever wonder if having one person handle your home purchase and your mortgage is actually better? Let me show you what happens behind the scenes and why it matters to your wallet and to your sanity, the traditional way. What goes wrong when the agent and the seller aren't on the same page? Imagine planning a wedding and forgetting to book the venue. Well, that's what happens when real estate deals move forward without the lender and the realtor syncing up. Everyone's excited, there's music playing, flowers are ordered, and then someone says, wait, we forgot to book the venue. The 90-day flip-flop fiasco. Carlos and Denise, first-time homebuyers, absolute sweethearts. They find their dream home in Fontana with modern upgrades, light staging, and not a single popcorn ceiling in sight. Offers accepted, everyone is high-fiving, and escrow is open. The agent's already picking out the closing gift candles, but then I take a look at the title chain and pause. The seller bought the home just 68 days ago, and suddenly, the music stops. Here's the thing, no one caught. FHA has a 90-day flip rule. If the current seller hasn't owned the property for at least 90 days, we can't even pull the FHA case number. No case number equals no appraisal, equals no loan, equals no closing. So not only is this deal frozen, we can't even start the clock until day 91, which means we're looking at a minimum 2 to 3 week delay after that just to close. It's like showing up to the airport and realizing your flight doesn't even exist. Now let's talk about the seller. They took their home off the market. We've got a solid FHA buyer, done deal. Except now their home is tied up in escrow limbo for a loan they can't move forward. They missed out on other offers, cash buyers, conventional borrowers, people with simpler financing. They lost time they can't get back. And in real estate, time equals money equals regret. Carlos and Denise, they're crushed. They try to pivot to a conventional loan, but that's not a simple switch. Their credit, well, the score is a little low. The debt to income ratio, a little high. The algorithm gods are not smiling. Moral of the story is, when agents and lenders don't have a game plan together from day one, deals fall apart slowly, painfully, and with a lot of avoidable drama. But there's a smarter way to do this. Most people think that the mortgage process is about income and credit, but sometimes it's the invisible stuff that stops everything cold. So let me tell you about Lindsay and Chris. Engaged, dual incomes, solid careers. They were excited to buy their first home together, a beautiful property listed for $765,000 in the city of Upland. They came to me early, ready to start house hunting, but before we looked at anything, I asked, can I run your numbers for myself first? Because here's the thing, I'm not just a realtor, I'm also a mortgage broker. So when I help someone buy a home, I look at the full picture, not just what you want to buy, but what you can actually afford, based on how lenders think. And that's when I caught the issue. Both Lindsay and Chris had student loans. Now they weren't worried because those loans, they're deferred for another year. There's no payments showing on their credit reports and there's no bills due. But here's what most people and even some lenders miss. Under conventional, FHA, and VA guidelines, if there's no payment listed, the lender still has to count 0.5% of the loan balance as a monthly payment, I should say. That rule, even if you're not paying anything right now, the bank still has to add a phantom payment into your debt to income ratio. So if you owe $120,000 in student loans combined, that's $600 a month. And that gets added in even though you're not paying a dime yet. And that $600 was just enough to push their ratios too high to qualify for that $765,000 purchase on their own. Most people don't find out until they're already in escrow, which is where the deal falls apart and hearts get broken. But because we caught it before they started shopping, we had time to pivot. I said, look, if you want to buy at this price point, you'll need a co-signer, someone with good income and low debt, someone the bank trusts. Lindsay took a deep breath. My dad will help us. And he did. We added him as a non-occupant co-signer, restructured the loan, and within 48 hours, they were fully approved. We toured, found the house, made an offer, and closed the deal with no drama. And that's the one-stop shop advantage. And that's what it's all about. They didn't have to wait for days for answers, and they didn't get blindsided mid-escrow. They didn't even get passed between the realtor and the loan officer saying, you know what, I don't know, let me check, I'll get back to you. I was the loan officer. I was the realtor. And that made all the difference. And at the closing table, Lindsay told me, "Thank God you told us about this up front. We would have never known." So if you're planning to buy a home with student loans, car loans, credit cards, and you think deferred means ignored, just know that banks don't ignore it. But if you're working with someone who understands both sides of the deal, you will never get caught off guard. All right, let's get honest about what happens when one person, like me, handles both your real estate and your mortgage. Some people hear that and they worry, isn't that too much control for one person? And I get it, it's a fair concern. So let me tell you a quick story. I had clients come to me once after a nightmare transaction. One person did everything, but nobody explained anything and the details got missed. They felt left in the dark, frustrated, and anxious the whole way through. When we met, I told them, look, it's not about me wearing two hats. It's about transparency, systems, and most importantly, communication. Here's what can go wrong if someone tries to do it all without those guardrails in place. It's true one person can't fight for both sides in a negotiation unless everyone's interests are totally aligned. That's why if I'm ever in a dual agency situation, it's only when everyone, buyer, seller, all parties are fully informed, comfortable, and in absolute agreement on what it means. If there's any hesitation, I won't do it. I make it a point to break everything down for my clients, the good, the bad, and in between. So if you can make truly informed decisions, that's the way to go. Here's the thing. When it comes to the mortgage, it's not just me. I have a highly trained, specialized loan processing team backing me up. They're licensed pros with track records of their own. We run loan scenarios, double check numbers, and talk to underwriters to make sure nothing slips through the cracks. It's a whole team, not just one guy juggling everything. If you ever feel uneasy or have a question, you should always feel comfortable speaking up. My business is built on trust, and that means being available and accountable every step of the way. So when should you not use someone like me for both roles? If you'd feel better having totally separate people at every step, or just want extra checks and balances, and that's perfectly valid. Sometimes having that extra layer is exactly what you need for peace of mind. But for most clients, the reason they love working with me is that you get one point of contact, clear communication, and a whole support team behind the scenes. So there's less confusion, less finger pointing, and a much smoother process overall. At the end of the day, it's not about how many hats I wear. It's about the trust, transparency, and the team working behind the scenes for you. What sets a great dual agent apart? Let's be real, not everyone who does both jobs does them well. So what actually sets a great dual agent apart? Whether we're talking about real estate, finance, or any other field where someone wears two hats, what to look for? Expertise that runs deep. You want someone who's truly invested in both sides of the process. It's not just about collecting licenses. It's about connecting the dots and seeing the whole picture, not just the corners. Consistency. If their advice lines up from start to finish, you're in good hands. If the story keeps changing, that's a red flag. Clear, relatable communication. Can they actually explain what's going on? If they can break it down to you so that you get it, that's gold. Integrity. You need someone who tells you the truth, even when it's not the answer you were hoping for. Adaptability. The best can roll with the punches, pivot when things change, and don't mind admitting that there's always something new to learn. Preparedness. Problems pop up. A great dual expert doesn't panic. They've usually already thought about what could go sideways. Reputation. Honestly, don't just take their word for it. Google them. Check their reviews on Yelp, Zillow, or wherever people are sharing the real scoop about them. Past clients will tell you what the business card won't. My biggest lesson in 23 years, if there's one thing that all these years have taught me, it's that you never really arrive. The business, the rules, the people, everything, it's always moving. I've been humbled more times than I can count. And honestly, the pros who make it aren't the ones who never mess up. They're the ones who learn, adjust, and keep going. Humility and self-awareness are as valuable as any skill or strategy. How I keep getting better? Honestly, staying sharp in this business is about never sitting still. It's always about learning. Whether it's picking up a new workshop, trading war stories with other pros, or just asking for honest feedback, even when it's not easy to hear. The world keeps changing, so I try to stay curious and flexible. New ideas, I'm open. New tools, I'll try them. And if I figure something out, I don't keep it to myself. Sharing what I know is the fastest way to really master it. And hey, just like you, I pay attention to what people are saying online. Reviews, feedback, good or bad, it all helps keep you honest and on your toes. Bottom line, the best dual experts aren't just knowledgeable, they're real, relatable, and never stop growing. If you find someone like that, hang on to them. That's who you want guiding you through the tough stuff. The number one question I get about being both, the question I hear the most, no contest, is, can one person really do both, realtor and mortgage broker, and actually do them at a high level? It's a smart question, especially in California where the market is huge and the rules, they get complicated. Just to give you some perspective, there are about 204,000 licensed realtors, over 433 total real estate licensees, and only around 26,000 people who are actually licensed to do both real estate and mortgage loans. Out of those, even fewer have a hands-on experience across the board. Having the license is one thing. Being the go-to expert, that's something else entirely. During the wild days of the subprime mortgage meltdown, I was the guy other loan officers would come to when they had a file that nobody could figure out. Option arms, stated income, negative amortization, exotic loans, you name it. And now with all that, there's new non-QM, non-qualifying mortgages out there for folks who don't fit the traditional lending box. I've stayed on the leading edge. I know how to get the tough deals done, whether it's non-QM, FHA, VA, USDA, jumbo, or just plain old conventional. Plus, I wasn't just selling loans, I was an FHA direct endorsement underwriter for a major bank. That means I personally reviewed and signed off on FHA conventional, USDA, and jumbo loans. I know exactly what underwriters are looking for, and I know how to get your offer and your loan lined up for a smooth closing, even in situations where most people would get lost in the details. Here's what this means for you. Instead of two separate people passing the buck, you get one point of contact who can actually anticipate problems, spot opportunities, and connect every dot between your home search and your financing. Even if you're using a non-QM loan or something outside the box, it's rare. And in a state with over 433,000 licensees, truly experienced dual agents are few and far between. Of course, if I ever see that your situation is so specialized that you'd be better off with two different pros, I'll tell you. My goal is to always do the best for you, not just wearing two hats for the sake of it. Now I want to hear from you. What's your biggest question about how the dual role works, especially if you've got a unique situation like needing a non-QM or VA loan? Want to know how I keep everything organized, or what it's like to work with someone who's been through every twist and turn this industry has to offer? Drop your questions in the comments. I answer every question personally, and with so many licensed people in California, there's only a handful with deep experience across every type of loan, every side of the deal, and every market condition. If you want to know what a true dual expert can do for you, let's talk.